Good morning from Chicago again, traders. It is 8:02 a.m. Chicago time on Thursday, the 19th of August, 2021. This is episode number 2055. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at where we stand. The market posture this morning is strong risk off as we exceed the 1.25% down mark on some products. The Russell leading the market, the U.S. market down, the Euro stocks and the DAX having had pretty decent moves. The DAX is off 321 points, as you see in real time here. The overnight risk posture is strong risk off. Overall, the concern is the Fed taper. This is along with the retail slump that was announced 2 days ago. We have more retailers having announced overnight and also announcing later today. COVID concerns, there are some real concerns that further restrictions will take place to manage this surge in the COVID Delta variant, which are likely to impact productivity, production, manufacturing, services, and others. In that, Toyota has decided to cut 40% of its production into next year as a result of supply shortages and COVID concerns. So that's been it. Yesterday, the FOMC minutes generally not a big market mover really, but what was seen yesterday in the minutes is that the Fed taper is real and is likely to happen sooner than expected. So the market responded by selling off right after the announcement. So it started off the sell-off yesterday, and it continued to precipitate into the afternoon as the dollar rallied. The bonds and the notes rallied, and we're seeing it in the overnight session. The S&P has pushed through some key areas and is likely to see some pretty decent volatility. Speaking of the S&P, B-shaped profile this morning. We opened up in the Asian session, held steady near yesterday's lows. And then we dropped off pretty strong right before the European Open, and have had outstanding range so far, 51.75 points. We haven't seen that in a while. Remember, the mode of the daily range for the overnight session for the last year, 252 days, is 23. It's doubling that. The first standard deviation, or what we'd consider to be normal range for the S&P, or well within normal range, is 39. So we're well ahead of that. Also, the volume is at 378,000 contracts so far. Which is well above the 220 mode. We've been seeing more like 150,000 contracts traded before the open. The S&P, statistically speaking, in the last year, 252 trading days is normal, up to and including 300,000 contracts before the open. We're at 378. So pretty active market. Pre-market, again, Kohl's, Performance Food, Macy's, Estee Lauder, and BJ's Wholesale Club reported. And then after the market, we're looking for Applied Materials and Ross Stores. And then in terms of what's on the calendar, there are a couple of items, but nothing really major this morning. We have CBE leading index month on month at 10 a.m., which is a low-tier figure. We get EIA natural gas stock changes at 10:30. We have a 4-week bill auction, an 8-week bill auction at 11:30, and a 30-year TIPS auction at 1 p.m. It showed a negative yield in the prior month, in the prior auction. This evening, Great Britain gets GFK consumer confidence, and Japan gets the inflation rate. China gets the loan prime rate at 9:30 p.m. Eastern. That's where we stand. Yesterday, the primary scenario was for a push down and then a rally into at least the 51 to 53 zone, and expected it to find some strength yesterday. That's a primary scenario. The secondary scenario is a push into the 46 area and then a rotation down into 4401, 4401, or the 4400 century figure is the key MC point of control. I'll show you that in a minute. That is the most traded price in the balance zone below 22 down into 44.22 down into 43.65. That's the next key zone below. Very obvious rectangle there. Again, I'll show you that in a minute. So yesterday, the primary scenario was expected to pull back a little bit and then squeeze into the 51, 53 area. Here's what we actually saw in yesterday's action. It was a busy day, just like Tuesday was, but let me clean this up a little bit. So we got scenario one right here, right off the open. Not much of a pullback, but squeezed into what was expected to be the 51 to 53. So we got the rally, and it looked like it might just chop around until the FOMC figures and maybe continue higher, the FOMC minutes. But what it did is it pushed up to 49.75.50, and then it turned around and it ended up pushing down into the 4,400. So what played out yesterday was really scenario two, which has better opportunity but is less likely given the context of what we came in with. So as we zoom out here and look at what we've done for the session, very clear line in the sand here in the 30, right in here. This line right here is became the line in the sand once we dropped below. It became a fighting zone. It's actually sloping a little bit upwards because I can't draw a sideways line on this software, and it doesn't allow me to hold down a shift or control key to keep it straight. Wow, that's really awesome. That's pretty straight. So you can see the price action. That's also the OS low of yesterday, and it happened to be the overnight low as well. That line right there is pretty much the line of the sand. Again, overnight low, the opening swing low, and the IB low of yesterday. We ended up breaking below it, tested above, and it became choppy here, pulled back to it, and then ended up finishing in what was a relatively negative or bearish tone. So we ended up taking out the prior days 44.11.75, and the expectations I talked about yesterday, I don't know if I put it on here or not, that if it takes out the 44.11, the prior day's low, then we are likely to see 44.01, and we pushed to 43.92 with 43.94.50 being the settlement price. Knowing this is where it stood, the expectation was it would likely push back into 4,400 and chop around here overnight before selling off. That's the expectation going into the extended trading hours. I talked about this in the Convergent Trading chat room. And you can see that the overnight high was 2 ticks short of that, 43.99.50. Before the sell-off. And now what we've done is we pushed to 43.50, which happens to be not only the mid-century figure and a couple other things, but it also happens to be the 50% pullback of the last swing. I have it marked here in my master levels. It's 50% of the July 19th till August 16th high. as 43.49.50. We went to 47.75 overnight. Looking at how this thing is set up, we have been trading. This is a B-shaped profile, as you can see here, a B-shaped profile. It's long liquidation, just like we saw the day before, and or was it the overnight session before? And what we have is a market that has moved away from higher prices and has found the opposing force in the overnight session. It put in a higher low and is trying to hold these prices as accepted prices. And so we have a range that is somewhere between 43.75 and 43.50, which is relatively wide, 25 points. A balance. The point of control is at 43.62, VWAP at 68, and the overnight mid is at 73.75. So we're opening out of range, and we're opening in a relatively decent gap. We're opening in a prior gap zone from last month, about a month ago, from July 23rd. So the market's out of balance currently. Let's hop in and talk a little bit about the big picture. I want to make sure you widen your time frame a little bit and look at what's going on in the big picture. And so this is the balance zone that I was referring to. It is from 22. I talked about this yesterday a little bit. We talked about it in the trade talk. For those of you who are Convergent members, the Tuesday trade talk, as I said, would be important to listen to. But we broke out of this range on non-farm payrolls for July, and we pushed to new all-time highs all the way up to around 44.75, and poked into this square. Again, the square is around 22 to 65, right there. We poked into it right here, and then yesterday we closed within it. The point of control for the square is 01 with the century figure at 4,400. We closed just below, so I expected it to chop around here in the overnight session after retesting. We're currently trading at 43.69. We're trading just above the low end of this range. Remember, these bars are RTH only. So the question is, and we went to 43.50 basically in the overnight session, right? So the question that we need the market to answer this morning is, what are you going to do with this 43.65? Are you going to get below that double bottom that you see there on your screen with the line underneath it? Are we going to push through and use that as resistance for a continuation down to 4,300 or not? We are currently off approximately 2.8%, I think, or somewhere around 3% from all-time highs. It's not that significant at this point. This is just a pullback. But if we get through what we see here at 43.65, then what we end up with is this structure right here. This is the latest auction in the area, and that auction has a very bumpy structure. It has no balance. This has pretty decent balance. It has fat balance at 4,400, and it's truly a balanced area. This is not balanced here. So if we take out the 65, we have a lot to work through here, and seeing 4,300 is not going to be very difficult. I think the shorts may gain momentum here below 65 this morning, and the next key support, as you can see on the screen here, is 42.50. So 42.50 right there brings us into this big balance that we had throughout the end of May and June, right in here. This will become the next key balance area, which puts us down at 42.20 for the MC point of control for that zone. I know I'm throwing a lot of numbers at you, but this is the story. This is the narrative in the context of how we're trading. So this morning, the question is, since we are so close to that 43.65 in the RTH, I know we took it out in the overnight session, but what do we do in the RTH? If we find a bounce, then we have 30 points to 4,400 is the first key resistance zone, 4,400. First structural kind of numerical resistance as opposed to market generated. And so we're looking for to bounce 30 points to 4,400 if we have responsive buying. Responsive buying. We are opening in a gap. Gap rules apply, and that's where we stand. So back to 43.9250 and 4,400 becomes the first play. The second play becomes a push into 15.16. That's the next key area. Above there, 22. And then if we get through the 22 and push into 36.38, guess what? Now we're in the middle of a short squeeze, and we are likely to see 4,500 new all-time highs, as we've done very often. How many did I lose in that whole narrative, in that whole story? Just make sure for your product you understand what the story is. Okay, very important. Let's take a look at what the market is telling us currently on the Edge Pro X platform. This is showing the action overnight on a 4-tick Renko, and what we see here is very methodical, a very methodical push down. You can see that back here, these trade clouds, these big trade clouds, very concerted effort here to push lower. And we can see that the delta is squeezing lower as well. And that creates an impulse. This is an impulse here. So we're looking for a pullback and a continuation trade. And you can see there's a battle on the low. You know, the sellers are hitting the bid, creating those red dots, creating those red clouds. The next question is, does price move? Does price move with that hitting? And if it does not, you end up with a short squeeze. You end up with compression and a short squeeze like this. The short squeezes back to mid, respects mid. So we could see that day-generated levels are being respected here. Short time frame traders in control during this segment of the overnight session. The time here shown is Chicago, which is GMT -6, I think, or -5 currently. And so it pulls back in, and as it starts to bounce, we see sellers, again, unable to hold price down. They're hitting the bid, but prices are moving higher. And then it comes back and it puts in a higher low, and now we get the squeeze. Now we see that predominantly red turns blue. And you can see the tape is nice and blue here. So this is setting up currently from the order flow perspective and price action. This is setting up for a responsive push back into yesterday's low of 92. And then it brings us, here's yesterday's low, 92.50 prior LOD, and then it brings the 4,400 back in line, the century figure back in line. So that's what I'm looking for this morning. This is my active trading chart. In the heat map doesn't really provide very much. There's block size that's moving up and down the book. You can see it's just popping in and out. So the heat map has not been very useful. But you can see the same thing. Look at this. It attempts to push to the low, and look at what's happening. It attempts to push at the low, and look at those clouds. Look at those clouds, the buy clouds. And boom, 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 they're lifting. They're lifting, and then you get the pop, and then you get the consolidation. You get a secondary pop, not much going on here. But as it starts to squeeze higher, we see more buy clouds right there, those blue dots. So this is pre-market. This is really starting to lift. It's really starting to lift. This is classic order flow trading, and it's giving us a clue that we are rejecting the overnight point of control, and we are likely to be responsive on the open. That's what I'm expecting. I'm really taking too long to explain this. This is almost like a crash course in order flow reading, but let's take a look at what's expected for today. Here we go, stock zones on, and so there's the low, there's the higher low, there's the point of control, there's VWAP, and there's mid and VWAP. That's VWAP. We're at VWAP now. We have an okay base right now. The expectation on the open is an open auction out of range that might blip down a little bit, but it's likely to be responsive. I'm looking for it to push back to 92.50, consolidate at the low, and then ultimately squeeze the overnight high at 99.50 back to 4,100. 4,100 being the MC point of control, expecting it to consolidate here. The thing to note is between this 44.22, this is the 22 level, folks. Look at how it bounced off and then it fell off through there. This becomes the key target above. This becomes the key area. If it's not able to hold this segment at the low and the 4,400 today, that becomes your big target. What does that mean? What does that mean? That means that you hang on. You don't put on one of these trades where it goes in your direction 2 points, and as soon as it pulls back, you get out. Hey, manage your risk. Your risk is your risk. But this is the plan. This is what we're looking for. So we're looking for it to test big areas, and if it does hold big areas, and I'm not talking about small 3-point rotations here, if it's maintaining force in a directional way, long or short, you don't pull the trigger to exit. You let your trade play out, and you've got these big targets right above 0001, right? 0001, the 92, 93. But if it chops around this 92, 93 and it's not able to fall back immediately, then you're looking for it to go to 22 as the key target above. That brings us right on the edge. So we've tested the point of control, we've tested the other side, and now we're going to test, we may test the top side of balance, which I told you was 22, 22.50. Got that? I'm going to leave you with that. I really need to go prepare for the day. And I know this is just one scenario. The secondary scenario is an open. You know what? Let me just draw it on here real quick. I'd rather not leave you hanging. The second scenario, open, push up, faces resistance, confronts resistance somewhere in the 80s, and then impulses down back to the point of control. And then from there, I'm expecting the overnight stat to be taken out 47.75. And then from here, we're really looking for a push through the 43.50 and a migration down, and that could take us all the way down to 4,300 from here. Okay, the big target is 42.20. 42.20 is the big target below for sellers. This is scenario 2. Okay, hopefully you gained something here today. Good luck. Volatility's higher. Cut your size. Widen your stops. Widen your targets. That's what I would do. Good luck, and I'll catch you tomorrow morning. Take care.